is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And very good afternoon, everybody. Happy Wednesday. No, it's Tuesday.
Wait, you wish.
How did that, Matt made fun of me all the time that we were on air because he's like, you don't even know what day it is.
Well, you do. It's a day that ends in Y, and it's Tuesday.
And it's a day that we get an indictment. Oh, no, that was yesterday.
That was yesterday. I thought it was going to be today, but it happened late last night.
Somebody on radio this morning, they were talking about Donald Trump, which we are going to talk about as well. Hi, everybody. Carol Masser, Tim Stenivek, Bloomberg Business Week on this Tuesday, August 15th. But I guess somebody was talking about his daughter and said, yeah, if it's a day that ends in Y, there's an indictment. Not funny. Funny, not funny.
It's, I think it was Insider earlier today put out a chart that showed the number of indictments that former presidents had, or I should say felonies that former presidents had been charged with. And it was a chart, and there was only, everyone else was, showing zero, and there was just one at the end showing many.
Well, it's something we say a lot here at Bloomberg, whether it's on the economy, the markets, or politics. We are living in very interesting and unusual times, unlike history, it feels like at many times. Anyway, we are going to talk about the former president and the latest charges against him. We're also going to get into cue some George Michael, if you will, because it feels like traders are losing some faith in the rate cut bet. I only said that because there's a new documentary coming about the supermodels who are in that video, so that's where my mind is right now.
Well, your mind should be on a lot of documentaries because with the writer's strike, we're not going to be seeing a lot of scripted TV anytime soon.
Saw what you did there.
Yeah.
Very nice. We're going to talk about that as well. Yields, once again, a story. We saw them kick up to some highs in today's session. You saw the 10-year at 4.27, highest since October. 2-year went above 5% before dipping back. 30-year real yield topping 2% for the first time since 2011, so over a decade, folks. So we're going to talk about U.S. Treasuries and that retail sales data that we got today.
Also, the most read story on the Bloomberg terminal, Blackstone's Steve Schwartzman says, get your act together, team.
Yeah, and we hit kind of, I feel like, our big story, and that is the Bloomberg exclusive with Lai Ching-dong, Taiwan's VP and the leading presidential candidate on avoiding war with China. It is a Bloomberg exclusive, Bloomberg editor, Business Week editor-in-chief, Joel Weber, sitting down in an exclusive conversation. That conversation, by the way, everybody, sparked a response from China, so we're going to get into that. We're also going to get into SBF's disgusting new home, Tim.
Yeah, it's at the Brooklyn Metropolitan Detention Center, an infamous jail in Sunset Park, where Sam Bankman-Fried is spending his time until trial.
And then we're going to check in with a former global head of autonomous AI co-innovation that over at Microsoft. He's got a new book out. Hey, right now, over to our TV team. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick here alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across Bloomberg Television, Radio Originals, all of our platforms here as we count you down to the close. Stocks in the red across the board here, Carol. Some of this was related to the China data, but believe it or not, some of this was related to the surprisingly good retail sales data here in the U.S.
Yeah, it's once again, right, Romaine? Good news is bad news. So some concerns.
I know, I said that. Katie said don't say that.
I've heard
Romaine, you and I just stick together, okay?
Yeah,
We do.
Yeah.
All right, so good news is bad news, Katie. It can happen again.
All right.
All right. Hey, listen, we were talking a little bit about George Michael and maybe traders losing a little faith.
George Michael?
Yeah, George Michael.
Oh.
Got to have faith.
Katie, you look so confused.
Come on, it was a great video.
What?
Supermodels.
Yeah, I do. R.I.P.
I didn't have this in my prep notes.
All right.
You gotta warn me.
The idea is traders losing faith in the idea that the Fed's going to cut rates at some point or near, sooner rather than later. So retail sales, right? We're out there spending, right, Tim? We're spending money. It shows strength in the economy.
I mean, I feel like I'm spending money.
Does Katie have any idea what you're talking about? Does she? What is wham?
You're not
When I say wham,
young.
what does that mean
You're
to you,
not
Katie?
that young. Jeez.
I think I'm doing my best here.
Well,
And we're also not that old. That's what it is, too.
Thank you.
Yeah.
Anyway,
Yeah.
she's seen a lot in terms of Treasury yields. We've seen them kick up on this stronger. I'm trying to find a segue. Help me.
Okay, well, it's been a long time since rates were this high. How's that?
So true.
Perhaps Katie and I don't remember that, Romaine.
Katie knows that.
The fact of the matter is, though, is the conversation has really shifted from, okay, how are we going to see another rate hike, or are we going to start to see rate cuts? Or it's going to shifted from that to being like, okay, we're actually going to see rates high for quite an extended period of time. And Neil Kashkari earlier today saying, there's no cut in the horizon.
Kashkari said that? Okay. The Careless Whisper from Neil Kashkari.
Another
I will
song.
say I do love the music video to Careless Whisper. I've gotten emotional to that one.
Okay.
Anyway.
You got something else, Katie?
Well, all right.
That's
so
your cue. That's your
ultimately-
cue, Katie. She's so caught up in this.
So wait, does it maybe go from higher for longer to just kind of how much longer? It's like kids sitting in the back of a car, on a long trip. Like how much longer in terms of the Fed?
I think that's the conversation, how long we stay on hold here. I mean, the conversation I was having last week on real yield was is holding hiking when you think about the tightening that's coming from the balance sheet as well. But I'm going to do a hard pivot here, one of several in this simulcast. We haven't talked at all about the Hollywood.
We didn't talk about this. What's happening?
We're going to talk about Hollywood. Let's talk a little bit about Hollywood. There's some great reporting on the terminal today about the Hollywood studios. They've made a new offer to those striking writers, basically including some concessions on issues around the use of artificial intelligence. We know that was one of the big sticking points, and also access to viewer data. This, of course, is according to people familiar with the discussions, Romaine, but a little bit of movement here.
Yeah, a little bit of movement, but I got to say, wake me up before you go, because, we have to sort of see, we have to see some sort of progress here. And I mean, I guess it's encouraging that there is something on the table, because we know that a couple weeks ago, there was nothing on the table. So the idea that they actually have something substantive to actually talk about, I guess that's progress.
I would be really surprised if the big streamers release that data to the writers.
No, they're not going to.
I would be hugely surprised if that would happen.
I agree.
I don't have another song. Damn.
No, okay.
I was
Trying to
hoping.
think of some way. I know. All right. Well, anyway, we will think. We'll be back in less than an hour's time. I love that you did another.
You have an hour
George
to come up with
Michael.
another song, Carol.
I know. But look at playing the game. Romaine, nicely done. All right, guys, we will be back less than an hour's time. We're going to count you down to the close on this Tuesday, our cross-platform radio, TV, YouTube, and of course, Bloomberg Originals. Join us for Beyond the Bell at 4 p.m. Wall Street time. There's the song.
There it
Thank you,
is.
Paul Brennan. Yeah, how long has this been going on? And then the question is, we just talked about with our TV colleagues, this whole idea that the Fed is no longer, talking about how high, it's more about how long. So how long do we stay at those higher rates? And, you look at something like the retail sales report that's out there, and folks are shopping on stuff.
The question I have, Carol, is this because the long and variable lag of rate hikes have not yet hit the consumer in certain areas?
Well, Jay
Or
Powell,
is it
thank you
because-
so much for joining us this afternoon.
Or is it because the consumer is just so resilient, having built up a cash cushion?
And Jay Powell, again, thank you so much for joining us this afternoon. I could see the press conference or the comments coming out of Jackson Hole next week.
Those are real questions, though. Like, why are consumers so resilient still?
I don't know. Balance sheet. I don't know because.
Why are housing prices not coming down?
What are you, a 2-year-old?
Just have questions.
Well, we have somebody to help us with some answers. Bloomberg News economics editor Molly Smith. She's here in our Bloomberg Interactive Broker studio. Hey, Molly, so let's start with the retail sales data. As soon as it came out this morning, we all knew that there was going to be at least initially some upside pressure on yields, and it definitely played out that way.
Yeah, and I mean, really, Tim, I think you just stole the cake from Jay and Jackson Hole right here. So these are
Why, thank you.
perfectly scripted. So that
We only had a Grateful Dead, shirt on. Like, it would have been perfect. Tim.
I'm not going to be fly fishing in Jackson Hole anytime soon. I'm going to be here working.
All right, Jay.
just like the rest of us. But yeah, I mean, I think it really is it still is a question that we would all love the answer to of like, is this because like the policy lags haven't hit the consumer yet, or they really just are that strong? And I think there's reasons to believe both could be true.
Well, take a step back. How strong was the retail sales data? Give us some perspective, because there were also some revisions, right, to previous reads.
I think that was probably what gave me the most, upbeat read on this report, because, we always say you shouldn't look too much into 1 month's worth of data. But when you see that there's big upward revisions to the prior 2 months, and it's like, okay, maybe that kind of boosts some of the optimism around this and gives you some more confidence in a big number like today's was.
Okay, but these are goods, not services. That's another
Correct.
thing to keep in mind.
Mostly goods, yes. There is one services spending category here, and it's also not inflation adjusted. But the reason why that actually in this case makes it look almost better is because in the last CPI report for this month, we saw more disinflation in goods, as in price growth being lower. So you would think then if you see this bigger retail sales number, then that that has to be also greater actual spending to combat lower prices. Or lesser price growth, I should say.
All right, so I want to bring Ira Jersey into the conversation. He is Bloomberg Intelligence Chief U.S. Interest Rate Strategist on the phone in New Jersey. So Ira, Molly setting the tone in terms of what we got from the retail sales data, including those revisions, which is largely the reason why we got that kick in yields higher. Talk to us about the trade today, specifically the significance of one day's trade and the trade we've been seeing in U.S. government debt. I feel like I keep asking you the same question.
Yeah. So we started the day actually with higher yields, primarily because of better data in Europe. So we had a big sell-off in Europe, and Treasuries followed that, and there was continuation of that weakness right after the retail sales report. But then I think the market kind of woke up and said, does this really change the forward outlook of what we were thinking, where we're going to have a soft landing or at least a delayed recession? The Fed might not cut as aggressively as we thought, and but at the same time they're going to cut at some point. So then you wind up having a bit of a reversal and people taking advantage of 4.25% 10-year yields and 5% 2-year yields. So and the market's very oversold right now as well. So I think it was just kind of an opportunity that people took to cover some shorts, at somewhat higher yields.
Ira, how high do you think we'll see on the short end?
Yeah, so we could get up toward 5.1%, 5.15%. It really depends on the scenario for the Fed and how long, and if firstly, if they're going to hike again this year, and then secondly, how long they're going to hold interest rates at the current level. When the market wakes up, I think eventually the market will wake up to the idea that the Fed might not be cutting interest rates until the fourth quarter of 2024. And if that's the case, you could easily get another, 15, 20, 25 basis points of sell-off up to around 5.1%. We put that in a note actually last week about different scenarios that could occur depending on what the Fed could do. But that being said, I think at some point in the next 3 to 6 months, we'll start to get a pretty significant rally in 2-year yields, and you'll see 2-year yields much lower on the idea that at some point in the future we'll start to price for very aggressive Federal Reserve cuts. I
don't know if you got this story, but Carol and I interviewed Catherine Kaminsky yesterday over at Alpha Simplex, and she saw 10 years. She sees 10 years going to 6%. What do you make of that?
Molly just passed out.
Sorry, I don't know if that was audible to the.
That was. It's all live, everybody.
All right. Yeah. Whoa.
Go ahead, Ira.
I think that's an amazing tail risk, and the only realistic way that you get to 10-year yields at 6%, firstly, is that the Federal Reserve increases interest rates more in the front end, and that's number one, or the Fed doesn't do anything and inflation accelerates, which is not a realistic possibility in my view, at least not with this Federal Reserve. So to get to 6% is really a hard nut. You remember the reason why 10-year yields are so much lower than 2-year yields right now is just on the anticipation that even if the Fed hikes another 25 or 50 basis points, at some point they're going to be cutting interest rates, even if it's not until 2026. So that's another scenario that we put out. Like, what if the Fed doesn't cut for 2 years? What then would the 10-year be pricing? And it turns out the 10-year would be pricing around 3.85% if they cut down to 3% in 2025. You still have unless the Fed's hiking, 10-year yields aren't going to probably break much higher than 4.5%.
Well, while we get Molly smelling salts, Molly, I'm going to continue in just a moment. One thing I do want to ask you, Ira, when the Fed, makes their rate moves, and obviously what we're now at, a 5.25 to 5.5. I mean, is there something that the Treasury, if you take a look at the 2-year, that it won't normally go X amount above that range?
So, yeah.
Is there a correlation that we can assume that it can't go to that 6%?
Right. So, if the Fed hikes to 6%, and then 2-year yields will probably go a bit higher, 5.5% or something like that. So that really depends on how the market prices for the future. If you think about what the 2-year yield is, it's the average of the overnight rate for the next 2 years. So if the market's at 5% and the Fed funds rate's at 5.5, then the market's telling you that at some point, the market's mainly going to be pricing for at some point the Fed cutting interest rates in the future. And, the reverse is true too, right? Like, let's imagine a scenario where the economy's falling out of bed, we see some job losses, inflation's still high, and the Fed doesn't cut. Well, then maybe you could see 2-year yields above the Fed funds rate. You saw that, for example, in 2021 when the market was preparing for the Fed to increase interest rates. You saw 2-year yields go much higher in anticipation of the Fed actually hiking rates.
All right, so let's go to the fundamentals. Molly, that's your game in terms of what we're seeing on the economic backdrop. I mean, this economy continues to surprise us in terms of its sustainability.
Yeah, and I think that's, still feeding into a lot of this soft landing argument. And, people definitely saw a bit of reason to keep being optimistic on that today. But of course, there is the risk on the other side of that, that if this is like proving to be an economy that's too hot, that is risking feeding into inflationary pressures again, then the Fed certainly is not going to let off and let that 6% Treasury come to fruition.
Doesn't the stickiness of like wages and rents or home costs, that's what's weighing a little bit on inflation right now?
Yeah, all these things. And this is why people have been saying that last mile, of getting from 3 to 2 is going to be the hardest and the longest. So I think that could be taking some of this euphoria out of this, what some people are calling the immaculate disinflation story.
Okay, well, speaking of euphoria being removed, U.S. home builder sentiment declining for the first time this year, Molly. Please explain.
Yeah, so there's, the mortgage rates are still really high, and I think it's finally catching up to, the affordability as well. That, we had seen some months of home prices coming down, but that seemed to be, didn't really provide a whole lot of help on the affordability side, and especially since mortgage rates are now, staying above 7% for a bit longer here, and more talk of like the Fed that it could very well hike rates again. And this discussion you guys were having as well, of not how high but how long, that's really putting some damper into the housing market activity. So builder sentiment came down because of current sales, because of future expectations, prospective buyer traffic, all those main indices that builders look for.
Ira, just real quickly, 30 seconds left here. Next week at Jackson Hole, you think the Fed is just going to work overtime to kind of get some of the volatility out of the markets, or what's your take? Just quickly.
I don't think volatility. I think that they'll probably focus on the how long question that we've been talking about at Bloomberg all day today. We've been talking about that really since May of this year. How can they jawbone taking some of the cuts that are priced out of the market?
Any last thoughts here, Molly? Or Jackson Hole next week?
I'm thinking about the U.S. Open,
I know
Carol.
you are. I know.
Yes.
It's okay. It's why we
Nicely
love you.
done.
One of the reasons, many of the reasons.
Always
we
have
love
to
you.
sneak it in.
Molly Smith, economics editor at Bloomberg News. The U.S. Open is a great indicator of the economy, I got to tell you. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence, on the phone in New Jersey. It is, kind of-ish.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we've got the Dow, the S&P, NASDAQ, all trading lower. S&P down 43 points right now. The Dow is down 303, a decline of 0.9%. NASDAQ down 130, a drop there of 0.9%. A drop in bank shares has dragged the S&P 500 lower amid signs the Federal Reserve's fight with inflation is not yet done. 10-year yield, 4.21% with a 2-year that's yielding 4.93%. Spot gold down $3.50 the ounce to $19.03. That is a drop of 0.2%. And West Texas Intermediate crude oil is down 1.8%, $80.99 for a barrel of WTI. Retail sales rose more than forecast, suggesting the economy can support higher rates and potentially dissuade decision makers from a policy pivot. Joanne Feeney is a partner at Advisors Capital Management. She says it's no secret that the U.S. consumer does remain resilient.
You look at the data on real disposable income, and you see it's actually been rising for the last several months. That is adjusted for inflation, and it's because there are more people employed. It's because wages have kept growing while inflation has slowed down. And so there's more money in household pockets, in real purchasing power. And that's why we're continuing to see pretty strong numbers.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Amazon shares among retailers trading lower now by 2%. Macy's down 2.3%. Target, which reports tomorrow, down 1.8%. And Walmart, which reports on Thursday, lower by 0.1%. Again, recapping, stocks are lower with the S&P down 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Mr. Pellett, welcome back, by the way. Charlie Pellett with a Bloomberg Business News Flash. Carol Massar, along with Tim Stanovic, live in our Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. So one of the giants in the private equity world, we were talking about Blackstone, Steve Schwartzman.
You've interviewed him. I've interviewed him.
Read his book?
Yeah, read his book.
He is iconic. And, kind of when you think about private equity, there are some firms that have been around for a long time, really set the stage for the giant world of PE today. I think of KKR, I think of Blackstone.
The question is, do you want to be on the receiving end of maybe an intervention by Steve Schwartzman?
You mean he's a little angry?
Yeah. Do you want to be on that side?
No, and apparently he did stage an intervention with his executive team earlier this year. This story, by the way, is the most read on the Bloomberg on this Tuesday. And basically his message to his team, Tim, was get your act together.
We got Dawn Lim with us in the Bloomberg Interactive Brokers studio. She's Bloomberg News private equity reporter. She was on the story this afternoon. Again, Carol mentioning it's one of the most read, or it is the most read on the Bloomberg terminal. Dawn, good to see you. So what exactly needed an intervention?
So, Blackstone's best known for buyouts. In recent years, it's been pushing more into higher growth sectors of the economy. The firm best known as Steve Schwartzman's firm is seeing a new generation of leaders rise and put their stamp on it. So Blackstone raised, a large fund in 2021 to do growth bets. It went into buzzy startups like Spanx and Bumble.
So growth bets are like being a venture capitalist to some extent, right? Ish, like looking for those growth stories that were still in their growth trajectory.
Growth bets typically involve taking stakes in firms that are maybe a little bit more mature than venture capital bets, but unlike buyouts, they generally are, on the verge of profitability. They may not be there yet.
Are they privates that they take these stakes in, or are they already public companies that the managers think have really a lot of room to run?
Yeah, they're typically private stakes.
So these are companies that are pre-IPO, but they've already raised money in the venture world. Blackstone then comes in with its growth fund and says, okay, we believe in you. We think there's going to be an IPO. There's going to be some sort of exit, and it's going to help our
It's going to make our investors lots of
exactly
money, right, when we exit.
Which did that end up happening?
So the business known as BXG is a relatively young business. Blackstone went big in 2019. So the first fund, a very large fund, it's not made a lot of money yet. It's delivering 1.1 multiple on invested capital. That means on paper it hasn't lost money, but it technically hasn't, made a lot of money. The firm has had to write down some bets, and the write-downs have erased some of the early gains.
It's interesting too, right? I mean, when you get to, what do they have, like $1 trillion like they're playing with? I mean, they are massive. So moving the needle,
It's a lot
right?
of money.
And the growth is tough. It gets tougher. So this is why they're looking into the equity growth business, right? What I'm curious about is, because we're all wondering, take us back to this intervention. What exactly played out? What did you find out?
So this happened at the start of the year in New York. Steve and John, faced a room of senior executives.
That would be John Gray,
And
right?
that would be John Gray, the
Right.
president of the firm, and basically had a message for them. It's time to be more disciplined. It's time to knuckle down. We're in a tough environment for growth equity. Growth equity has become a dirty word. Investors are more cautious. And they said it was time for more discipline.
Yeah, which is kind of like I don't know that you're being talked down, but man, it's like basically your manager saying, like you said, get your act together, right? I mean, it's pretty stern.
Okay, but to play devil's advocate here, okay?
I'm sorry, you're already playing.
If I were in that room, I would have said, no, I wouldn't have said anything. Who am I kidding? But the truth is there's probably no worse time to launch a growth equity or a growth-focused fund than, after the bull market of 2021 and when we saw the bear market of 22. And that's right when this thing launched.
Exactly. It was, the fund arrived at the peak of the market, right, and faced the tech swoon the tech rout of last year. And it's been a very tough time for growth equity investors, right? Across the industry, people are wondering, are things worth as much as we thought they were? With big tech, champions like Google and Facebook falling last year, people started to realize maybe we should be marking down the valuations of our bets too.
Yeah, I do feel like, what's interesting is, and Tim, you bring up a really good point, like we saw this with the regional banks, it was such a easy money environment for so long. It was easy to make money in the environment in so many different ways. And then that changed dramatically, right, in a short period of time. And I feel like we're seeing the fallout, whether it's, pick your area.
Absolutely. I mean, yeah, whether it's, regional banks or whether it's growth stocks. I guess, Dawn, it brings me to a question, sort of an existential question about what is considered private equity these days. The fact that Apollo now wants to call itself an alternative asset manager rather than a private equity firm. Is there any indication that, given that these private equity firms, traditional private equity firms, these alternative asset managers, in quotes, are not staying in their lane with traditional buyouts? Is there any indication that it's like, okay, well, we were or are really good at one thing, maybe we shouldn't get out of our lane?
So part of this is definitely a very dramatic shift that's happened in the last decade. Private equity firms have increasingly encroached on bank territory.
Private credit, anybody?
Yeah,
Tim
I was
and
just gonna say
we
that.
talk about this all the time, that the last couple of years at Milken, it's just been about private credit. Everybody and anybody. It's like whatever happened to the public markets. Anyway, forgive me. Go ahead.
Yeah, so as in the post-08 era, when banks were retrenching, private equity firms took the opportunity to step up to become bigger lenders. It is just another example of their growing reach into different parts of finance and the economy. And the shift raises really interesting implications for what does it mean, right, that there's a new breed of non-bank lenders, right, gaining more reach over the economy.
And then are subject to the whims of what goes on in the economy, whether it's higher rates, slowdowns, right? Like they've got to then deal with all of that maybe they didn't so much as private equity firms.
But also not regulated like a bank.
Well, that's true.
So they don't necessarily have the same reserves that a bank would, right?
Right, exactly, potentially.
Well, part of what the industry argues is that because it doesn't have depositors, that have a flight, it tends to argue we're safer than banks.
But
it will be
mean,
interesting to see how the credit cycle plays out.
Right. It doesn't mean investors won't get hurt, right? If a lot of companies can't make those payments and go under, there's going to be a loss at some point. We haven't figured that out, right, for the private lending side yet.
And private equity firms tend to say we don't lend with on-balance sheet money, but it's interesting as they become more intertwined with insurance firms, what that means. Many of them have struck deals to take stakes in insurance firms, and as a result have gained access to vast reserves of pools that power annuity policies, retirees, and that is the reserves they use to lend.
Kind of terrifying.
It is, but at the same time, if businesses can't go and get loans from banks, then they have another place to turn to, which there's an argument that it helps power the economy.
Right, exactly, and continue to provide momentum.
Yeah.
I got to say, it's a fascinating story, and I do think, there's a reckoning that we are going through for so many parts of our financial world and business world in this different rate environment. And also, there's been such a search for yield, which has maybe caused the likes of Blackstone and others to figure out new ways to find it.
Short end of the yield curve? There's some yield there.
Yeah, exactly, right? Right, exactly.
Sure, and that...
No, go ahead.
And that actually, is a result, that actually is a reason why, firms face a tougher environment for fundraising now, because investors have so many more higher returning options to turn to.
That's a really good point. Dawn, thank you so much. So appreciate it. Dawn Lim, private equity reporter at Bloomberg News, here in our Interactive Brokers story. It's the most read on the Bloomberg.
Let's get to Washington, D.C. Nancy Lyons is standing by with the news. Hey, Nancy.
Thanks, Tim. Former President Trump now faces another indictment, this time in Fulton County, Georgia, where the DA is accusing him of heading a criminal enterprise to overturn his election loss in the state. Political analyst and University of Virginia professor Larry Sabato weighs in.
It goes right to the heart of democracy and the actions that Donald Trump took as president, even before January 6th, to overturn the legitimate election results. There can't be any greater concern for our democratic system than the questions raised in this indictment.
Sabato says despite the seriousness of the charges, he doubts this indictment will convince MAGA Republicans to move in another direction. The criminal case against President Biden's son, Hunter, has taken a new turn.
Hunter Biden's longtime lead defense attorney, Christopher Clark, has asked to step down from the case. In a filing with the federal judge in Delaware, Biden's new attorneys say Clark now intends to testify on behalf of the president's son that the Justice Department is backing away from its plea deal. Biden had intended to plead guilty last month to 2 misdemeanor tax charges and enter a 2-year diversion program to avoid trial on a felony gun charge. The judge, though, questioned the constitutionality of that deal in court. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Virginia mother of the 6-year-old who shot his teacher in the classroom is pleading guilty to a state charge of felony child neglect. Online court records indicate Deja Taylor will be sentenced in October. She's already pleaded guilty to federal charges of illegally obtaining and possessing a firearm. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ very much in the red. Right now we are at the lows of the session. So let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks are slumping as the sell-off broadens to hit bank stocks. The Dow is down 355 points, S&P lower by 50, with the NASDAQ falling 155 points. The U.S. 10-year yield is at 4.22%, and small caps are down 1%. All 11 main S&P sectors are trading lower, led by losses for energy, financials, and materials, while health and tech are the top performers. NASDAQ biotechs drop 5 points, transports fall 1.5%, semis slip 45 points, while the VIX is higher by 8%. Leaders in the Dow, Amgen, Home Depot, and J&J, while Dow Inc., JP Morgan, and Chevron are the worst performers. After earnings, Paysafe jumped by a record after boosting its forecast for the year, while Grindr gained after raising its 2023 outlook. In other news, Hawaiian Electric extended losses to a 14-year low after S&P cut it to junk. Discover Financial sank to the lowest since March after its CEO resigned, and D.R. Horton, Lennar, and NVR rose after filing showed Berkshire bought shares in the second quarter. Wrapping things up, look for earnings from Agilent and Kava after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just got about 17 and a half minutes left in today's trading session, getting ready shortly to head over to our TV colleagues and talk about a little bit about the trade. But in the meantime, we've got a great guest to do that as well, Tim.
Yeah, very pleased right now to be joined by Lisa Erickson, Senior Vice President and Head of Public Markets Group at U.S. Bank Wealth Management. She joined us on Zoom from Minneapolis, Minnesota. Lisa, how are you?
I'm great, thank you.
Okay, so I don't even know if we should start with the bond market or the equity market today, Carol. I think I'm going to start with the equity market here because that's certainly what I'm interested in. We just heard from Charlie and from Bailey that the selling that we're seeing has increased. We're at the S&P 500 down 1.3% right now, the NASDAQ down 1.2%, and the Dow down more than 1%. Is this just, and we should say it's on very low volume, Lisa, but is this just a minor setback? We've seen such incredible growth in the S&P 500 so far this year. August not looking so good.
Well, we're really neutral on the U.S. equity market right now. And the reason why is when you look at the puts and the takes, we really find them fairly balanced. So our expectation in the near term is really for more of what we would call a chop period, where investors are just going to be swung a little bit more by the news flow, because bottom line, really what it's looking for is some resolution on the inflation front and the policy front, with where the Fed may be headed with its continued monetary tightening policy, and as, of course, continued information on earnings and guidance. And while there's still uncertainty about where those three figures lie, you're just going to see stocks really move up and down both ways as, again, we get incremental news.
So I am curious, you guys, deal with a lot of wealthy investors, and what's top of mind for them? Because they end up, I would assume, make an investment and kind of sit in it for a long time, Lisa. So is that what they're doing, or they're saying, listen, I'm a little nervous. There's a lot of optimism. People have backed off recession. What can we do? So give us an idea of what kind of conversations you're having with your clients.
Really the main conversation is around, again, looking forward into 2024 and 2025, really what the prospects are. And again, our best thinking right now is for our clients to stay strategically typically where they would be in equities and fixed income, and really at this time not going big on either overweighting or underweighting those main asset classes. And again, the reason why is there's still lack of clarity about, again, the forward growth potential, which would of course then influence both equity and fixed income returns. And with, again, that level of uncertainty, again, just staying more at those long-term weights, we think really makes the most sense.
Okay, so I guess my next question really is about your outlook for the economy, separating it, of course, from the stock market. We talked a lot today about retail sales that came in stronger than expected. I'm wondering, Lisa, if you're still making a call for a recession.
Our base case, really based on our work with the U.S. Bank Economics team, is that we're going to continue to have some slowing growth, but hopefully avoid a recession. And if we do get one, it'll be of the more moderate garden variety as opposed to a very severe recession. And that economic forecast is really on the back of the fact that we've seen the consumers stay relatively resilient and companies as well be able to so far manage both their top and the bottom lines to really manage, again, a more tough interest rate and potential consumer spending environment to actually have both those top and bottom lines turn out okay. And so on the back of that, even though we see some slowing, we see so far those engines continuing to be able to hold in there, which again gives us more of a soft landing type of outlook.
So one thing I want to ask you, you are head of the public markets group, Lisa, and I'm just curious, we just came off what is the most read story on the Bloomberg has to do with Blackstone. Obviously big in private equity, private credit, growth equity, private everything. Your investors, are they more interested increasingly in what's going on in the private markets I mean, it's interesting. You can get yield, like Tim, you said earlier, in a simple 2-year treasury.
Exactly. A 30-day.
Exactly. So I'm just curious, are your investors more interested in private markets or public markets?
Well, certainly we've seen an uptick of interest in the private markets really over the last few years, and that is actually on the back of our advice that clients, where they have the ability to handle some more illiquidity in their portfolio and longer time horizons, to look at those private types of vehicles for their portfolios. Certainly when you look over time, just the fact that, again, you get an extra risk premium for investing out with a longer time horizon and for not being able to make flows in and out as quickly, plus some of the additional economic sectors that are accessible via some of those vehicles, we think really make for an interesting case, again, for clients where that's an appropriate fit for their portfolios.
I'm going to ask you the question I ask everybody, Lisa. If somebody comes to you with a big old pile of money, how are you deploying it right now?
So, of course, once we do the initial financial planning work and the initial asset allocation work, we would really, again, advise going for those strategic targets at that time. And then, again, looking how policy and inflation particularly continue to play out over the next few quarters to look at where there may be more opportunities to over and underweight on a big asset class basis. Now, within asset classes, we do have some specific interesting recommendations to deviate from just really what would be the broad index recommendation. So, for example, in fixed income, again, for clients with the right kind of risk tolerance, we do see some extended sectors as interesting. So sectors just beyond, plain sort of investment grade bonds, as well as non-agency mortgages. And so there are some areas based on current valuations as well as fundamentals underpinning those nicer yields that we see of interest at this time.
All right, we're going to leave it on that note. Hey, Lisa, thank you so much. Lisa Erickson, Senior VP and Head of Public Markets Group over at U.S. Bank Wealth Management, with us on Zoom from Minneapolis, Minnesota. All right, Tim, we've got about 11 minutes left in the trading session. We're bouncing around on the equity side of thing, near our lows, more than 1% lower in each of those three major averages.
Yeah, the Dow down more than 1%, the S&P 500 down 1.2%, Carol, and the NASDAQ down 1.2% as well. The selling has accelerated as we got closer to the closing bell. We should say we are relatively low volume, down 13% on the S&P, but, kind of what you'd expect for August.
Yeah, I mean, maybe finally things are slowing down, and then, of course, you've got Jackson Hole just around the corner.
I mean, I'm told stocks don't always go up. I was told that.
What?
Yeah.
Every major industry group in the S&P 500 down, with energy your worst performer. More to come on the markets. right here on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to move lower. We've got Lyft shares higher, though, after the ride-hailing firm's CEO, John Risher, and director Dave Stevenson both bought shares of the company. Lyft right now is advancing by 4%. Uber shares, based in San Francisco as well, down 1.7%. Vietnam's largest electric vehicle maker, VinFast Auto, is now trading on NASDAQ first day out, thrusting the little-known firm into the same league as other large, renowned car makers. Right now, we have got VinFast surging by 70%. Tesla is adding new lower-range iterations of the Model S sedan and Model X SUV to its lineup that cost $10,000 less than their previous base prices. Tesla shares down 2.6%. Home Depot earnings topped estimates. Drew Redding covers the home building industry for Bloomberg Intelligence.
Yeah, so Home Depot had a modest beat. Same-store sales down 2%. Expectations were for a decline of about 4%. I mean, this was pretty much in line with what we were expecting. There's been some noise quarter to quarter with lumber and weather. The key takeaway is that they reaffirmed their full-year guidance, calling for a decline of 2 to 5%. Which includes a backdrop of the broader home improvement market falling 5 to 10%.
And right now, Home Depot shares are up by 0.7%. Lowe's, which reports next week, is falling by 0.9%. Those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, everybody. We've got about 4.5 minutes left in today's trading session. We do have equities just bouncing off their lows, but down more than 1%, as you just heard from Charlie, on both the NASDAQ and the S&P. We're going to head over to Scarlett and Romaine for Beyond the Bell in just a sec.
In the meantime,
we
got a lot of good stories that are among the most
We
read
always have a lot of
on the Bloomberg terminal.
Yeah.
I want to talk a little bit about the Hindenburg. They've revealed a short position on the brokerage firm Freedom Holding. And I don't think you were here. You weren't here when we did the deep dive on Hindenburg, were you? No. Okay, so it was a great deep dive on Hindenburg a couple weeks ago. We covered it on our program. And Nate Anderson's Hindenburg Research, that is. And it's back. It's unveiled another target, Freedom Holding Corp. It's actually a Kazakh retail brokerage firm that the short seller has accused of fraud.
Ouch. Stock's down about 3% in today's session. It's about a $73 stock.
I'm surprised it's not down more given what's happened to other targets of Hindenburg in the past.
That's a really good point. Stock's up almost 26% this year. About 3% of the float is shorted. So in that report that was released today, Hindenburg writing that a year-long investigation into the company has revealed, quote, a laundry list of red flags, including evidence that Freedom, quote, brazenly skirts sanctions, appears to have, quote, fake, unquote, revenue. And also talks about the use of their money to make leveraged and illiquid bets. The report also accuses Freedom of market manipulation in its investments and publicly traded shares. That's pretty heavy stuff.
What did the company say in response?
What did they say?
They said...
Go ahead.
Okay.
No, you go.
Well, now I lost it, Carol.
The publication is speculation and a set of unsubstantiated facts. A spokesperson for Freedom said in a statement, the company said its annual report is audited by Deloitte and all related party transactions are analyzed and disclosed. I mean, what?
The reason I lost it is because I was going back to our August 6th story that was written by Catherine Burton all about Hindenburg. If you haven't checked it out, go check it out. Carol, you were on vacation, but it starts talking about Gautam Adani, Jack Dorsey, Carl Icahn. Nate Anderson has picked them all off. In mere months, he erased as much as $99 billion off their combined wealth while knocking $173 billion off the value of their publicly traded companies.
Freedom, by the way, founded in 2008 in Moscow, later moved to Kazakhstan. It went public on the NASDAQ in 2019. The stock has soared more than 422% since then. I could see why maybe the shorts might want to at least look into it. All right, folks, just a few minutes left in today's trading session. Time to head over to our TV colleagues. Count you down to the close on this Tuesday. Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with our friends Carol Massar and Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms on a day where we see markets on the back foot all day long, selling into the close here, Carol Massar, on what's setting up to be the broadest base sell-off that we've had, at least going back to March.
Yeah, it's funny that you say that. We were looking and talking about the major industry groups in the S&P 500. You're seeing selling really across the board. If you're looking, though, for some outperformance, check out those home builders. And I guess you kind of have to thank Warren Buffett. I'm going to talk about it a little bit later on in my gainers, but he's been buying some new bets into the housing sector, and that's really give them a kick.
Carol, how closely do you have to look for outperformance today? Pretty closely.
I don't know. I found it pretty easily.
455 stocks in the S&P 500.
Well, I was just taking a look at it, guys. I mean, we talk about these 90% days. I know that's kind of just an imaginary number we came up with this, but this is, at least right now, one of those 90% days where 90% of the S&P 500 is in the red.
You know, we're actually seeing volume's 10% lower as an average over the last 20 days, Scarlett, which surprises me that we're actually seeing activity on a summer day in August.
Yeah.
Well, it is a down day, and volume does tend to pick up on down days. So it's the slow melt up that detracts very little volume. What's notable, and I was just looking back at the decline advanced line, almost 6 stocks down for everyone that is higher on the New York Stock Exchange, the broadest sell-off since late April.
We should point out that we are seeing some modest buying into the close, but not enough to sort of overcome the big losses from earlier in the day. I think probably one of the more notable developments here, at least when it comes to the technical levels for the S&P 500, is that it looks like we're going to get a close below that 50-day moving average. It was to be the first time that we've closed below that line, since, once again, late March. 52 points lower on the S&P 500, 4,437 and change as we wait for the numbers to settle, down 1.2%. The Dow Jones Industrial Average down 360 points, below 35,000, down 1% on the day. The NASDAQ Composite lower by about 157 points or 1.2%. And the Russell 2000, stop me if you've heard this before, down 1.2%.
Wow, yeah, so across the board, as you guys mentioned earlier, so I'm just going to go back come over to your side. 42 names only in the S&P 500, Scarlett, actually gaining ground, 461 to the downside. So really broad-based selling here.
And let's take a look at the sector breakdown, because it's a pretty straightforward breakdown today. Everything in the red. Actually, if we update that, pharma,
come on.
that's barely. I mean, that's
come on.
Does it count?
Embrace it.
I don't think so. I would call that down at this point. Actually, you know what? If we update that, because I'm just ticking it over, it's off by 0.1%. So if we could ask the control room to refresh. But in any case, all 15 members of the S&P 500 Banks Index also lower as well, with that group leading the declines, off by 2.8%. In fact, you have 3 groups in the red by at least 2%: energy, autos and components, and banks.
All right, now I'm going to freak out because now I'm really worried that my gainers are not going to hold. But let's see what we've got here.
There we have some green. Scarlett hates the green, but look, Carol comes through for us.
Don't worry, Scarlett. My
terminal
is showing all red too, Scarlett. Don't worry.
She is.
I just worry a lot. That's all.
She's so normal. Okay, so let's get to it.
Come again? Unlike the 3 of us.
All right, it's normal with quotation marks. All right, let's get to the home builders. I talked to you about the outperformance here. Look at D.R. Horton. It's up about 2.9%. Number 2 gainer in the S&P 500. Lennar, by the way, was the number 4 gainer. Getting a boost, those 13F filings. Thank you, Berkshire Hathaway. They bought positions. D.R. Horton, Lennar, and VR in the second quarter. All 3 home builder positions new for Berkshire Hathaway per that most recent 13F filing. NVIDIA, the darling of the year. Oh, I had Amgen. I thought I switched it to NVIDIA. All right, so we'll go to
NVIDIA down there still. It's there. It's there.
Yeah, Carol, you just have to keep going.
Yeah. I'm trying to keep track.
Okay.
This was a top gainer in the S&P and the NASDAQ. Thank you so much. Up about 2%. I have no idea why. There was no fundamental reason. Yesterday, Mizuho raising its price target from 214 to 223, closing at 266 and change. So maybe they want to raise it again. And their bonds were more than twice the average in terms of trading for this day. So I don't know. Help me out here. NVIDIA, there it is. Thank you, Scarlett, for that. Up about 0.4%. At its high, was up about 3.5%. UBS raising its price target, and this follows a move by Morgan Stanley, which also boosted its price target, ahead of its earnings. Nick.
All right, you had the hard job today, Carol. I had the easy job today, finding decliners. The worst performer on a percentage basis in the S&P 500, Discover Financial Services, falling today after the company's CEO, Roger Hochschild, said that he's going to resign. At the same time, Discover also saying it's going to focus on improving compliance and risk management. You'd think that on a day where an S&P 500 component falls 9%, it would be the worst day in quite a while. It's only the worst day since July 20th. So
you kind of separated those 2 elements. And I'm curious, Tev, I mean, the idea that this announcement would come and then they would couch that announcement in this idea of a refocus on compliance.
Well,
there's a lot you can read in between the lines of that.
Well, you can actually, I mean, it just comes a few weeks after Discover actually announced that it would pause share buybacks amid an internal review of compliance, risk management, and corporate governance. So there you go.
I always love when you have to refocus on compliance. Shouldn't you always be focused on compliance?
No, the buck stops with the CEO.
I guess so.
All right. Remember a few years ago when we talked about C being in the green all the time? C Limited, it's that e-commerce payment services, digital content company focused on emerging markets based in Asia. Well, based in Singapore, it was in 2019, it was up more than 250%. 2020, it was up nearly 400%. Well, today it had its worst day ever, falling close to 29%. The stock is down nearly 90% from its highs back in 2020. Reported revenue that missed analyst estimates and said it plans to increase investment, a move that could erode those profit margins. And then another check on Hawaiian Electric Industries today, down another 31%. The company wiped out $1 billion in market cap yesterday. Investors, that is, did it today, finishing down, wow, close to more than 30% once again. Analysts are trying to raise questions over whether the company will be able to withstand the pressure if it does end up being at fault. We should note that no official cause of the fires in Maui have been determined, but it has become the deadliest in the U.S. in more than a century.
Yeah, let's take a look at what's been going on in the yield space. There were a lot of fireworks earlier in the day, right around 8:30 a.m. when we got that U.S. retail sales report. A huge spike in the two-year yield at one point above 5%, so a level that we haven't seen in quite some time. Now, as you can see on your screen there, that we did see a downdraft later in the day, almost immediately, as a lot of people started to reassess Fed conditions here. The net effect of it was the two-year yield on the day down by about 2 basis points. Across the longer end of the curve, you're higher by about 2 to 3 basis points, including the 30-year yield right now at 4.32%.
You know, I just want to give a shout out to Carol Masser, who for so long kept us up to date on what was going on with the NASDAQ Golden Dragon China Index and all those Chinese stocks.
I love you, Scarlett.
You look at HXC Index, that's the ticker for the NASDAQ Golden Dragon, off at 1.9%. And of course, FXI, which tracks the big cap China stocks, the ETF, that's down 1.6%. What do you think about the China data? What do you think it was about the China data that really got people concerned? Because we knew that the data was going to come in fairly weak.
Yeah, I think it's just a continuation of the struggles. They can't seem to get it. They can't get domestic spending to happen. They're now worried about the impact of real estate, spreading out into financials and kind of watching more of the traditional financial sector to see if it ends up there. I just feel like, you know what, Scarlett? Every day it feels like there's just another sign that they just can't seem to get it right.
Drumbeat of negative news, right? And then the rate cut feels like...
Surprised everybody, right?
Surprised, but in a way that was bad because it was like, oh, we're behind the curve. Now we have to somehow get ahead of it.
I am curious, if we could bring it back just to the U.S. here. Why do you think there was that disparity in the reaction between what we saw in the China's economy? And we should point out, too, that this wasn't just about the data or even what the PBOC did, but when you have Janet Yellen come out while she's supposed to be doing this world tour for Bidenomics, basically saying that the ripple effects of China does actually pose a risk, something that, let's face it, they haven't acknowledged before. I am curious as to how you fold that in with the data that we're going to get later this week, housing data, Fed minutes, and of course more earnings out of the retailers.
Well, I would say that a lot of U.S. companies continue to be inextricably bound to China, not just from a customer perspective, but also from a manufacturing perspective. We've seen a decoupling happen over the last couple of years, the so-called nearshoring. But we still have a lot of companies like Starbucks, like Nike, like Disney that rely on China. And if the Chinese economy isn't doing well, if the Chinese consumer is not doing well, it affects companies here at home.
That's definitely one of it. I wonder, though, to some extent, whether Janet Yellen talking about China having a ripple effect is going to at some point affect the Fed. Remember, Jay Powell used to say external events, international events, which was code for China. Could China slow down and the tepid policy response be something that tips the Fed to maybe cut rates sooner than what people are forecasting now? I don't know, but it's a possibility.
Peer pressure? I mean, I don't know why that would affect what the Fed does here if we're not seeing it reflected in the data here at home.
No, it's not. It's not. But the good thing is, I mean, if you're looking for a silver lining, doesn't this add to the deflationary, I guess, the upside for deflation when it comes to the U.S. if China is sort of hobbled or wobbled or whatever phrase we're using?
But Scarlett brings up a good point, actually. Do you guys remember it was like probably 8 months ago? I think it was New Zealand cut rates.
Yeah.
And in the U.S.,
we
the
all
reaction
remember where we were that day.
And the reaction here in the U.S. was like, wait a second, a central bank is cutting rates. Maybe the U.S. central bank will cut rates soon.
All I would
They
know,
didn't.
all I would say, look, go ahead. What?
No, come on. The U.S. I mean, look. I hate to sort of bang our chests here in the U.S., but I mean, look. I mean, we're the largest economy. We're the most influential economy, and I don't think Jay Powell is taking a lead from any other central bank than his own members.
They're not, but the Fed was behind. It was particularly against when you compare it to the Latin American central banks.
It's like we like each other and like talking to each other.
He was behind. Well, but look at the results so far.
The only thing I would say is during the great financial crisis, everybody said it's not going to impact the emerging markets. They're separate. They're immune, and it impacted everybody. So all I would say is, as the second biggest economy,
are you calling the
China,
next great financial crisis?
I'm not saying it's a GFC, .2 or something, or 2.0. it's an important economy.
Yeah, no, I'm not saying it's not.
It bears watching.
I mean,
we don't know how
it
it's
is
going
the
to
second largest, Carol. Now.
You know, it's a good thing we have Wednesday because we can continue this.
We have to do this tomorrow.
If they force us. All right, guys, we'll talk to you later. Have a good, what do you have, a few minutes left? You guys get out of here in 30 seconds, right, or something like that?
Yeah, we're gone in 2 minutes.
Yeah, we have 20 hours. All right, that's a wrap. Our cross-platform coverage, Beyond the Bell, we call it radio, TV, YouTube, Bloomberg Originals. We love. We'll see y'all tomorrow. There's still a lot of questions out there. We're trying to figure it all out. One thing we, though, now know is the latest indictments, if you will, against the former President Donald Trump and some of his top administration officials and associates indicted in Atlanta over efforts to overturn the results of his 2020 election defeat in the state of Georgia. It was the fourth criminal case against the former president as he campaigns for the White House, with more on the 41 felony counts, this 97 pages of the Georgia indictment, and also maybe about the indictment smoking gun. That's something that our Tim O'Brien, that he writes about.
Well, we welcome in Tim O'Brien, who is Bloomberg Opinion Senior Executive Editor, as well as the author of Trump Nation, The Art of Being the Donald. He's with us on Zoom from New York City. Also with us is Bloomberg News legal analyst and host of Bloomberg Law, weeknights at 10 p.m. on Bloomberg Radio, June Grosso. She's here in our Bloomberg Interactive Brokers studio. So, Juno, I want to start with you. What is sort of the big legal smoking gun here that Tim wrote about, but that your impression of it?
Well, I think the big takeaway of this is that it's just a sprawling indictment, unlike anything that we've seen, even in the special counsel's January 6th investigation. It reaches from the Oval Office and that phone call that we've all heard to Brad Raffensperger to find 11,780 votes, to the fake elector scheme, to stealing of election data in a rural county in Georgia, to harassment of an election worker. We'll remember that we saw that in the January 6th, how she broke down because of the Ruby Freeman. So it's just a sprawling. It's going to be, I think, very difficult to imagine even this going to trial with 19 defendants. And the big takeaway is under Georgia's RICO law, which means that there's a mandatory 5-year prison sentence, mandatory minimum 5-year prison sentence, and also it's pretty much pardon proof.
All right, so Tim O'Brien, come on in. You wrote about the smoking gun. Tell us your takeaway from the Georgia news.
Well, I think it's a devastating indictment. You know, it is just chock full of example after example after example of Trump and his co-conspirators breaking the law. And it's unadorned and it's fact-driven and there's nothing partisan about it. It is just purely about enforcing a law. And I think that, the argument that Trump has routinely put up in the face of this last wave of indictments, the 2 federal indictments, and now the state case, is that he was merely exercising free speech and he was complaining about a voting process that he authentically thought was rigged and he was trying to get to the bottom of it. And it's just, he's entitled to say whatever he wants to say. As an American with free speech rights, he is not entitled to then do something about it. And this entire case is not about what he said, it's about what he did. And what he did is allegedly break the law on multiple times with 18 other people involved in the conspiracy. And I think he and his lawyers are going to have a very hard time battling this case in court. I think one of the reasons he's trying to get it removed to federal court is to slow the process down. But ultimately, he's not going to be empowered, even if he gets reelected, to meddle with this case in the same way he can with Special Counsel Jack Smith's 2 federal indictments. And I think it is just a disturbing and devastating narrative about what they did to subvert democracy.
Well, in a big way that this case will play out, is the judge before who's going to be overseeing this. June, talk to us about Judge Scott McAfee.
So we just learned that this judge is now going to be handling this case, at least at this point, and he's newly elected. He was appointed by Governor Brian Kemp, and so he hasn't run for office as much as most the elected judges in Georgia have to run for office. And he's basically been a prosecutor for a long, long time. He was a prosecutor for a decade, including 8 years as an assistant U.S. attorney for the Justice Department in Georgia. He's a Georgia native, and he's lived there for a long time. And recently, he served as Georgia Inspector General under Kemp. So he investigated claims of fraud, waste. So he has a lot of experience as a prosecutor, but not much experience as a judge. Now, he's, at this point, we don't know if it might change for some reason going forward.
Hey, Tim, I want to bring you back in here and talk about the politics angle of this, because despite the 3 previous indictments that we've seen of Donald Trump, we continue to see his approval rating move higher. And in fact, he's moving ahead in the polls. I shouldn't say approval rating, but where he is in the polls. He's by far the front runner right now. Does any indictment move the needle when it comes to what members of the Republican Party think of him?
Well, Tim, he was way ahead in the polls before the indictments came down. So I don't think that there's pure cause and effect here. I think he's been ahead of Ron DeSantis by double-digit numbers for quite a long time. And so I think the argument that, that prosecutors enforcing the law only helps Donald Trump's campaigns is a weak argument right now that could end up being true, perhaps. But I think we won't really know the full effect of these suits until they land in a courtroom and a narrative can be told publicly, much like the January 6th investigation, which once that became a televised event, it really changed people's minds about what occurred around January 6th. The 2 federal cases won't be televised, but Bonnie Willis's Georgia case will be. I also think TV ratings have sort of softened around both of these cases, or all 3 of these recent cases. There hasn't been the same kind of viewer interest. But again, I think we're a long way off from demonstrating whether or not these will have a political impact. I think that Trump's most loyal voters are never going to be influenced by these cases, but they're not the ones who will ultimately tip the scale anyway in a presidential election. What matters is how independents feel about this and moderate Republicans.
June, are you anticipating that we could see some of those charged actually flip and go against the president?
Yes, because several reasons. This RICO case, as we all know by now, was initially formed in order to get the mob and to get the criminal boss who's at the top, whose hands aren't dirtied, and then you have all the lower levels, you would call them soldiers, I guess. So in this case, you have Donald Trump at the top, and you have all these levels, different levels, middle level, lower level, some people that we haven't heard of before. And they're now facing a minimum of 5 years in prison, maximum of 20 years in prison, and the judge has no discretion as far as the 5 years. They're also facing enormous legal bills. Some of these people may not have the money. This is going to go on for a long time with just motion practice. So all these things will come into play, and whether, I'm not sure it will be someone at the top of this alleged chain, like Rudy Giuliani or Mark Meadows, but I think that some of the people at the bottom will likely flip and testify for the government.
Well, they can ask Sam Bankman-Fried about being in jail. Tim O'Brien, just got about 15 seconds. You would just very quickly, you're going to assume President Trump, former president, he's going to do delay, just very quickly.
Delay, witch hunt, witch hunt, witch hunt.
Thank you. You take a cue like no other. All right, Tim O'Brien, Bloomberg Opinion Senior Executive Editor there, and of course our June Grosso, Bloomberg News legal analyst. Thanks, guys.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. We begin with a developing story and a headline from the Bloomberg Professional Service. Occidental Petroleum is acquiring direct air capture technology firm Carbon Engineering. That headline right now on the Bloomberg Professional. Stocks lower across the board. In fact, the drop deepened in the final hour amid signs the Fed's fight with inflation is not yet done. S&P was down 51 points, a decline of 1.2%. The Dow today down 361, a drop of 1%. Nasdaq down 157, a decline of 1.1%. 10-year yield 4.21% with a 2-year at 4.95%. Spot gold down $4 the ounce to $19.02, a decline of 0.2%. West Texas Intermediate crude oil down 1.9%, $80.97 for a barrel of WTI. Bitcoin down 0.7%, 29,171 on Bitcoin. So again, recapping a down day with the S&P falling 51 points, down 1.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. The news continuing in the after hours. We did want to talk a little bit about what's going on over at Tesla, because just one day after dropping prices on 2 versions of its Model Y in China, Tesla has now added new lower-range iterations of the Model S sedan and Model X SUV to its lineup. These cost $10,000 less than they used to, Tim. He is reining in, bringing down the prices.
Well, Elon Musk, the CEO of Tesla, did say last month that Tesla would have to keep lowering prices if interest rates continue to rise. And, Carol, I don't know if you know this, but interest rates have continued to rise. He's warned that he's willing to sacrifice profitability to keep growing sales. Remember, the company's automotive gross margin fell to a 4-year low in the second quarter.
All right, so we wanted to talk a little bit more about this. So for our Plugged In, which we do every Tuesday, this segment, we're joined by Bloomberg Technology co-host Ed Ludlow. He's there in our San Francisco bureau. Ed, you know, Elon Musk continuing to cut prices. Talk to us about this strategy. I guess this is what he said he was going to do, right?
Oh, it's what he said he was going to do. It's like one of the few occasions where he did do what he said he was going to do.
Now I'm worried. Now I'm worried.
Oh, wait, you didn't ride? You didn't take a robotaxi, a Tesla robotaxi to the Bloomberg San Francisco office today?
All right, Tim.
Well, I've been riding a lot of robotaxis, but they don't have a Tesla nameplate on them. But I think you guys summed up the story well, which is like tough environment for the consumer, not just in the United States, in China as well, and you know, I think across all of Bloomberg's output. In the last 7 days, we talked a lot more about China's economy. But price cuts are one mechanism. 24 hours ago, we had news that Tesla cut prices on the higher spec Model Y variants in China. What we get now is a Model S and X, Tesla's premium vehicle here in the US, a new entrant, a new base version of each that, as you said, is $10,000 less than the prior generations. But remember the context that of all the vehicles Tesla shipped in the first half of this year, S and X make up about 3.5% of those. It's the premium product, but it's just another lever at Tesla's disposal, and clearly they're happy to make use of it.
What's the strategy here, though, Ed? Is the strategy to force a price war so other companies end up dropping their prices as well, and then Tesla emerges victorious in some way, or can Tesla at scale actually make these things cheaper?
Well, Tesla's never stated that its actions to bring down the average price of its vehicles are to induce a price war. But what they have said consistently, is that they're willing to sacrifice profit, the bottom line, to protect their stated goal of 50% annual growth every year, you know, in terms of vehicles produced and delivered. And, you know, every time you bring the price down, there is evidence that it unlocks a new pocket of demand, people that can suddenly afford that vehicle at that price point. And if Tesla's ambition is to advance the transition to sustainable energy, have more people drive EV, then we take them at their word that they're doing that, bringing the cost down and making EVs more accessible, also so that they may grow.
Well, and I also think about, you know, the more EVs he gets out there and does make them more accessible to a wider swath of consumers, first of all, you're going to need more, you know, Tesla charging stations. You're going to need, like,
True.
And it entrenches maybe a consumer into kind of the Tesla family. I mean, I grew up initially as a GM family, you know, a General Motors.
That's a great point.
You know what I mean? So I do think about some of his strategies and how they are, I think, often smart, if not sometimes a little crazy.
Well, every time I write a story or Dana Hole writes a story about the EV market, we always say either Tesla, the market incumbent, or chasing Tesla, the market leader for EVs. Right. And they've really benefited from that kind of first mover advantage. You know, there was a time where we'd come on this show on Business Week and talk about how Tesla was the only option for both investors and buyers to get exposure to electric vehicles. That's just not true anymore. And, you know, go back to what we started this conversation on, price cuts. Actually, Tim, to answer your question, do price cuts lead to a price cut war? Well, in China, remember, there's so many more names now, domestic players who make EVs, that do respond when a name like Tesla cuts prices. You may see those domestic players follow suit.
Okay, so it raises the question that I have about other pockets of demand. You talked about that, Ed. When Tesla does lower prices, it finds other pockets of demand. What about a Tesla ecosystem? And I ask this question because of services that are sold along with other cars, not necessarily Teslas right now, except for the self-driving feature. Talk about profitability with, go ahead.
No, FSD is a great
full
point.
self-driving.
I'm disagreeing with you.
Yeah. So it's the question is really about additional sort of tertiary services, the same way that, you know, if Apple gets more iPhones out there, it can build on its services growth and revenue.
It's a perfect tie to the news of 24 hours ago, which is that Ford had hired Peter Stern, a name well known to us here in Silicon Valley because he was the former services chief at Apple. Ford have hired him to lead what they're calling the integrated services unit. But the point is they want to make money off software, and the reason you want to book revenue on software is it's so much higher margin. I think on the media call about Peter Stern's hiring, yes, that's right. Farley, who's the CEO of Ford, said that the margins on the software revenues are over 50%.
Wow.
Much more attractive than building a metal car. And Tesla's was, again, the first mover on that. Not just charging for FSD, but the promise of being able to improve the car over-the-air update, you know, and kind of the original entertainment and operating system play for Tesla was saying, like, look how great our software is.
So does that mean potentially, Ed, that, I don't know, in the future it's not about actually driving a Tesla car, but Tesla essentially becoming an OEM, you know, for other automakers and just providing the platform or the FSD, you know, just providing all of the backbone of making a car and not actually having a Tesla vehicle?
You know, to their credit, sell-side analysts have a stab at this every time on Tesla's earnings call. They're never successful. But I think the main question, if you could ask Tesla executives or Elon Musk one question, it's when do you start licensing full self-driving to others? Basically, say to Volkswagen or to GM in this country or Ford, will you license the technology from us? Because they've done it with the charging standard, the NACS. That's been a story of the year. But they could make so much money if they just said, here's our software, here's the secret, license it from us.
I don't care what kind of car you make, but just use my platform. Hey, having said that, I'm also just wondering, and don't chuckle yet, if maybe Elon Musk is just a little worried about an IPO today. I'm thinking about VinFast. And I know you guys caught up with the CEO. First, let's just listen to him, and then I want you to talk about it. Here's what he had to say, and forgive me if I mispronounce. How do you say his name? Do you know? Le Thu?
So Le Thuy. Or Madame, her name is Madame Thuy in Vietnamese parlance, but have a listen,
We have been working on the U.S. listing for like 2 years, and we're very happy that we made it today. VinFast has become a publicly listed company in the U.S. It's not just it's not a marketing, it's just a milestone that we want to achieve as on path of becoming a global company.
All right. So, of course, that's the VinFast CEO talking to you guys, going public. But they've been trying to do this for years.
Right. So, really quick, at the close, the shares closed at $7.06. That's 255% above the SPAC that took them public's close. They went public via a reverse merger with SPAC. Gives them a market cap greater than General Motors, a market cap greater than Ford and Rivian combined. So something nuts happened today, crazy. And you heard her laugh in the answer to you guys. And the reason that she laughed is I asked her point blank, was this just a marketing exercise to go public?
Right.
Because not many people have heard of VinFast. They told us they weren't trying to raise money from the SPAC. So what was the point in it? And I guess that what I was trying to get at with her is that, you know, traditionally a listing of any kind raises the profile of a company. They've had a horrid time launching their vehicles in the US. So I was trying to look for like the positive on them today.
And they are building a factory, aren't they, in the US, or trying to?
Yes, the factory ground has been broken in North Carolina. They have delivered about 1,000 units so far here in the US, but they recalled 999 of them. If you guys read any of the trade pubs, the auto magazines, they've been absolutely slammed about how poor the product is. And the conclusion that many people reached is that they shipped them to the US from Vietnam without them being ready in this country.
Wow.
But hey, the stock market doesn't mind. That's crazy performance.
At least today. Hey, I had 20 seconds. You talked about being in robo-taxis in San Francisco. What's that been like?
Amazing. I have a newsletter coming tomorrow. I'm a registered rider on Cruise and Waymo. The news last week, they can now charge for fares. San Francisco goes from being the proving ground for the tech to the proving ground for being a commercial business. It's so normal here. So I think you're going to see the pace of innovation go, and I've written about that for the Tech Daily on Wednesday.
So goes San Francisco, so goes the world, I
Maybe.
sometimes feel like.
I think probably in this case, yeah.
You are a gem. You covered the world. You do keep us plugged in. Thank you so much. Of course, our Ed Ludlow, who's co-host of Bloomberg Technology from San Francisco.
Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Former President Trump will be holding a news conference on Monday to address the new criminal charges against him that were filed in Georgia regarding his alleged efforts to overturn the 2020 election. Jim Zirin is the former assistant U.S. attorney for the Southern District of New York and the host of Conversations with Jim Zirin. He tells Bloomberg Fulton County DA Fonnie Willis is experienced in these kinds of cases.
It might take some time before they can pick a jury. It might take some time for her to get all this evidence in. But I think that the case is going to proceed, and I think she'll try to prosecute the case expeditiously. Trump will try to put as many hurdles in front of her as he possibly can. And the question is, will she be able to overcome them?
Jim Zirin spoke with Bloomberg Sound On. House Speaker Kevin McCarthy is among the Republicans sticking with Trump. He's accusing the Fulton County DA of using the case to fundraise her political career. He adds Americans can, quote, see through this desperate sham. Meanwhile, House Judiciary Committee Chairman Jim Jordan calls it the latest witch hunt against Trump and claims the president did nothing wrong. President Biden says he has promised the governor of Hawaii that he'll receive all the help he needs to recover from the deadly wildfires that have killed nearly 100 people in the state. Biden, while touting his economic policies this afternoon in Milwaukee, said he does plan to visit the scene of the disaster.
My wife Jill and I are going to travel to Hawaii as soon as we can. That's what I've been talking to the governor about. I don't want to get in the way. I've been to too many disaster areas, but I want to go make sure we got everything they need.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting earnings from restaurant chain Cava Group. It does expect higher profits this year, although it's cautioning that a muddy consumer spending picture could limit sales gains. After hours, Cava Group up by about 4%. Occidental Petroleum is buying Canadian startup Carbon Engineering Limited for $1.1 billion in cash. The American oil producer Occidental has been working with Carbon Engineering on technology for carbon renewal, known as direct air capture, since 2019. It was a down day on Wall Street. A lot of the selling intensified in the final hour amid signs the Fed's fight with inflation is not yet done. S&P down 52, a drop of 1.2%. The Dow down 361, a decline of 1%. NASDAQ down 157, a drop of 1.1%. 10-year yield 4.21%. The 2-year 4.95%. Spot gold down $5.50 the ounce to $19.01, a drop of 0.3%. West Texas Intermediate crude oil 81.12 a barrel, down 1.7%. So it was a down day. What though may lie ahead for investors? Lisa Erickson is head of Public Markets Group at U.S. Bank Wealth Management, and she was our guest right here on Bloomberg Business Week.
So our expectation in the near term is really for more of what we would call a chop period, where investors are just going to be swung a little bit more by the news flow, because bottom line, really what it's looking for is some resolution on the inflation front and the policy front, with where the Fed may be headed with its continued monetary tightening policy.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. An earnings beat from Home Depot today. We did see Home Depot shares advance on a down day for the rest of the market. Home Depot was up by 0.7%. Rival Lowe's, which reports earnings next week, fell by 0.9%. Again, recapping stocks lower across the board. S&P fell 51 points today, down 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, back in early 2021, SPACs were really having a moment, to say the least. But today, yeah, it's a bit of a different story and environment. Of the roughly 400 de-SPACs on U.S. exchanges, those are companies that have merged with a SPAC like WeWork, Wheels Up, and a few more. The median performance year to date is down 50%. That's according to data compiled by Bloomberg, Tim.
Yeah, and about 15% have gone bankrupt since the peak in early 2021. So let's get a SPAC update and talk more. We've got Isabel Friedheim with us, CEO and founder of Athena Consumer Acquisition Corp. It's an all-women-led SPAC platform. You ever recall, we've talked with members of the Athena team in the last few months. Isabel is on Zoom from Aspen, Colorado. Isabel, how are you?
Good, thank you.
Well, it's good to have you with us. Carol and I were talking about this as we prepared for the segment, and we thought, you know, it's so interesting because it would make sense to be talking so much with SPACs in 2021, maybe early 2022. But today's news of the EV SPAC notwithstanding, SPACs aren't really happening much anymore. Why is that?
Well, actually, they are. There have been 9 SPACs announcements in the last couple of weeks. That's 94, up to 94 now year to date. The prior year, we saw about 300 closed SPAC transactions.
So a big decline from even last year.
So far, year to date, we're at 94. I expect that we will see tremendous activity in the fall as well. There's no question that the IPO window remains shut for now, and SPACs continue to provide access to public markets. It's unquestionably challenging. That being said, for companies that want to go public, we are proving that there is a viable path through SPACs.
Tell us what that viable path is, because as you know, SPACs, in general have been around for a long time, but they definitely have very distinct up and down cycles, up extremes and down extremes. So where are the opportunities that are actually going to create companies that are with us for the long haul and that actually, will ultimately provide good liquidity events for those founders and their companies?
I think the supply and demand forces of the market have created a new equilibrium such that now investors are interested in companies that are generating revenues that are close enough to profitability. And that's just a result of demand on the investor side. And that is what created this abundance of SPACs in 2020 and 2021 was really a demand from investors. We saw a lot of institutional investors who were starting to invest in pre-IPO companies because they wanted access to these kinds of yields that were at the time not available elsewhere. So SPACs created an answer to this demand from investors. And it wasn't just institutional investors, it was also retail investors. The demand was there for earlier stage, high growth.
Do you think that demand comes back though from retail investors?
Retail investors tend to shy away from highly volatile products, right? And what we see here, we continue to see some volatility. There may be interest, and I think there are companies that continue to answer that demand, but that demand has changed. And the poor performance that we saw as a result of combinations that closed in 2020 and 2021 is really the result of investors pulling out and going into a risk-off mode. So you continue to see now transactions that are performing much better than they were in the past because the valuations have adjusted to the new reality of the market. They're often benchmarked to comps, publicly traded comps, and the companies that we see that have closed recently actually perform much better. And there's no question that SPACs are going to continue to be in the current form or in a variation of SPACs, but they will continue to be an answer for companies that do want to access the public equity market because we're clearly not there with the IPO market yet. And not that we compete directly with IPOs, but it continues to offer a number of advantages.
So talk to us about deals that you guys have completed where you found opportunities.
Yes. So, for example, we closed a combination last year or 18 months ago with a company called Heliogen, an artificial intelligence company for the solar industry. We continue to announce combinations. We've announced a combination with an electric vehicle company based in Germany called Ego. We have recently announced another transaction with a company based in Abu Dhabi that makes water from humidity. And we continue to see very exciting companies that are attractive, well valued, both in the US and abroad.
Do you think the SPAC, because SPACs weren't new in 2020, 2021, SPACs had been around, but they've gone through cycles. Do you think this cycle is different in the sense of like SPACs are here to stay?
It's not a cycle. So what you need is the right sponsor. What happens?
Well, how is it not a cycle if you have them, spike in 1 year and almost completely disappear in another year?
Well, it was a cycle, but I wouldn't say that now we're in a cycle. I think we're in more steady states with regards to SPACs. And what happened is that many SPACs were launched simply because they could. And that's not a sustainable formula, nor a sustainable business model. And the surviving SPAC sponsors will be platforms of true value creation for the partner companies. And that is how we have positioned ourselves with our platform of multiple SPACs. As well as our fund, it's being able to provide long-term assistance to the company and provide a service. So we position ourselves as service providers. Many SPACs were launched by sponsors who were doing this part-time on the side, and that doesn't work. When you hire someone to do a job, when you hire an investment banker to take a company public, they don't do it part-time. So it has to be that we have full-time management teams and dedicated members. So in our SPACs, we've had, for example, among various boards, we've had board members of Fortune 100 companies like Citigroup, Comcast, Aetna, BlackRock, American Airlines. And we bring all of these resources along with a number of CEOs, operators, and as well as founders of companies who have gone through the journey themselves. So the service that we can provide is completely different than what you may have seen in 2021.
Isabel, so and the exit strategies are so important. Just got about 25 seconds left here. So for something like Air Water, does it go public soon or is it a 2024 story? Just very quickly.
We've announced a transaction. I would expect it to close in 2024. And But there are deals that are closing in 2023. There are a number in the pipeline, and I think we will see exciting performance.
Okay, well, we'll be definitely looking out for them. So good to get some time with you. Isabel Preedom, she's founder and CEO at Athena from Aspen.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. An update on Cava. The stock continues to push higher after hours. The Mediterranean restaurant chain Cava Group now up by 12%. It does expect higher profits this year, although it's cautioning that a muddy consumer spending picture could limit sales gains. Tesla is adding a new lower-range iteration of the Model S sedan, as well as the Model X SUV to its lineup that costs $10,000 less than their previous base prices. Vietnam's largest electric vehicle maker, VinFast Auto, started trading today on NASDAQ. The stock surged 255%. And with more on the VinFast rally today, here's Bloomberg's Steve Rappaport.
Charlie, the ticker symbol is VFS, and it comes after VinFast completed its merger with blank check company Black Spade Acquisition that valued it at $23 billion. VinFast is backed by Vietnam's richest man. The listing caps VinFast's years-long efforts to become a publicly traded company and puts it in the same class as Tesla, Lucid Group, and Rivian Automotive. Last month, VinFast broke ground at its factory in North Carolina. The plant is expected to have an initial capacity of 150,000 vehicles a year, and the company plans to begin production in 2025. Charlie.
And that's Steve Rappaport reporting. Lyft shares advanced today after the ride-hailing firm CEO John Risher and director Dave Stevenson both bought stock in the company. Lyft up today by 3.8%, Uber down 1.7%. Kava again after hours up 12%. Those are the company stories we're following at this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenivek. That's Carol Masser. And let's get to Nancy Lyons because she's got to check on the latest world and national news in Washington, D.C. Hey, Nance.
Thanks, Tim. Former President Trump says he will address his latest indictment in Fulton County, Georgia, during a news conference Monday. He promises there will be a complete exoneration. Bloomberg's Jody Schneider has more on what is actually contained in Trump's fourth indictment.
It was approved by the grand jury late last night, and basically it charges the former president and 18 other defendants, including such big names as former New York City Mayor Rudy Giuliani, former White House Chief of Staff Mark Meadows, and former senior Justice Department official Jeffrey Clark with racketeering and other crimes.
Bloomberg's Jody Schneider reports the DA, Fani Willis wants to try the case in 6 months, but some legal analysts say it's so complex, and with the former president facing 3 other indictments, the case might not go to trial until 2025. Well, the indictment is different from the others that Trump faces because it's on state charges, and former DeKalb County District Attorney Gwen Keyes Fleming says that means this case cannot go away with a pardon if there is a conviction.
Georgia's pardon rules require the completion of the full sentence, and then the applicant needs to have demonstrated that they lived a law-abiding life for 5 years after the completion of that sentence before they can even apply to the Board of Pardons and Paroles to seek a pardon.
Former DA Keyes Fleming says if Trump is convicted under the RICO statute or convicted on the racketeering charges, there's a mandatory minimum prison sentence of 5 years, a maximum of 20. President Biden says Hawaii will have everything it needs from the federal government to recover from the devastating wildfires that hit the state. While speaking from Milwaukee,
along with Tim Stenivek, live here in our Bloomberg Interactive Brokers studio on YouTube and, of course, on Bloomberg Originals. We've got a great hour coming up in just a few minutes, including the international cover story of Bloomberg Business Week, and we're going to get that. It's a conversation, an exclusive conversation that we've been talking about a lot at Bloomberg that actually sparked a response from China.
Yeah,
so we'll talk about that.
Joel Weber's going to be joining us in just a few minutes. In the meantime, Carol, I wanted to talk about a story about lab-grown diamonds. Are you familiar with these?
I think this is so interesting. We've actually had some great guests on, thanks to our producer, Paul Brennan, in terms of talking about some of these lab-grown diamonds. Pandora apparently raising its revenue forecast on strong demand. It's, of course, the Danish jewelry chain. They just opened up a big place right here on Lexington. Anyway, they're expanding sales of lab-grown diamonds, aiming to popularize the cheaper alternatives to mined gems. They're supposed to be just like diamonds, but they're just made in a lab.
So,
without the conflict around them or the war-torn